Hello and welcome back to Suitcase, the settlement series. My name is Beth Ward and I head up the partnerships here at Skybound Wealth Management. Now, in our final episode today, we're diving into a chapter that many expats don't see coming: repatriation. Now, whether that's a new opportunity, a family pool, or life simply shifting gears, returning to the UK can feel like a whole new migration. And if you're not financially prepared, it can get complicated really fast. I'm joined today by Mike Coady, CEO of Skybound Wealth Management, who is going to break down how to bring your wealth back to the UK the smart way, without getting caught out by those penalties, tax traps, or poor timing. Welcome, Mike.
Hey, how are you?
Good, thank you. So before we kick off, can you just give me a little bit of a brief overview of who Skybound are and how we support expats?
So Skybound are a global wealth management and financial planning business that really specialises in looking after people that will be expats in the future, that may be expats right now, or may have been expats in the future. And the reason we specialise in that is because of our global licenses, because of our expertise in mobility and people's confidence of dealing with somebody that can deal with them in multi-jurisdictions.
So Mike, let's talk about repatriation. So what does that mean and what does that look like for clients?
So repatriation, in the simplest of terms, basically is the opposite of becoming an expat. So in the same way as once upon a time we moved all of our lives, our family, our investments, all of our legal documents to a foreign land, now we start to go through that process of reversing out. So in many respects, that's us as individuals, could be our careers and roles in business, could be as a business owner, as an entrepreneur. But then we start to look at that asset migration as well. Where do we have assets? Where do we have banking arrangement? Do we have debts and facilities? Moving those back to our home country. And then, of course, starting to rebuild a life and rebuild that infrastructure in that new country, which from a repatriation perspective is many times our originating or our home country.
So now some clients might not even see repatriation coming. What are the reasons that pull them back to their home country?
Okay, I think starting position, I've been here 20 years. So over that 20 years, it's a bit like Saudi. I've seen the evolution of expats in this part of the world. So typically 20 years ago, people would come for this sort of 2-3 year space. They had a career, they had a job, they had something to offer. Nowadays, when people move to this part of the world, they see themselves being here for a much longer periods of time. They often want to raise a family here. They want to buy a house. They want to stay here up until retirement or beyond, yeah? But sometimes there are things or other influences that change those dynamics. Yeah, so sometimes people have good intentions, but there may be medical urgencies or emergencies. That might be with themselves or family. Often it's with relatives. People want to look after a sick parent. Yeah, there may be career or restructuring in their business, which means that their opportunities are not here. They need to go back to their home country. Yeah, sometimes the finances don't work out, and I see more of this more now than ever before, where people move to the country, they believe that they're going to be better off, and then when they include things like education, cost of living, actually the financials are not quite what they thought they are, and they return back to their home country. So there are lots of reasons why people go back earlier than perhaps was originally intimated, and people just have to plan and be ready for those situations.
So let's talk about some of those hidden costs of going back to the UK a bit unprepared.
Yeah. So I think there are probably two types of people that move back. There is one, like you say, that spend time thinking about it. They do it in 6 or 12 months. And then there are people that perhaps have to exit the country quicker than perhaps they would have wanted. And of course, many of those come with some levels of financial disturbance. So they could be midway through some sort of rental contract. They might have to sell their property. There may be some impact of taxes depending on when they sell that property. They may have to take kids out of school, and they may have already prepaid those school fees in advance. Yeah. They may be transferring money at difficult times in terms of FX rates, and the exchange rate might not be in their favor. They might be going back at a split year, and that might be disproportionate from a UK tax planning perspective. And then there are other things that need to be recreated. So for example, they might have a health insurance here. Do they need to recreate that? They may have renewable life insurance here with the banks. That may be cancelled. They may have to replace legal documentation. And all of these things come with cost. And again, this is where this sort of more careful or considerate planning using some form of expert will get a better outcome than trying to remember some of these things yourself.
Let's talk about what some of those investment mistakes look like and how clients can avoid them.
Yeah. So investment mistakes, particularly when you go back to the UK, can often evolve around tax. So when people move back to UK, there are tax implications. So dependent on split year treatment, when they move back, they may have investments, for example, that they need to sell before they go back. There may be consequences on the timing of those repositioning of those funds or those individual stocks. They may or may not have to sell their house. They may want to do that before they go back because of the considerable tax implications that would occur if they did not. Therefore, if they're rushing to sell it before that predetermined date, they may have to take a lower than expected position on their price of their house. FX can be a big thing, okay, dependent on the exchange rate at the time. We've seen in the last couple of years 20-30% volatility in sterling versus dollar. And again, that could have a big and significant impact on expatriates moving back to the UK.
Now, there's obviously quite a lot to think about when expats are moving back home. What are some of the intricacies that they need to think about when it comes to their bank accounts and property if they have it here?
So the first thing they need to work out is whether they want to keep those assets in this jurisdiction. So for example, they may have a bank. The bank may want to close that account. There may be some timing issues of when they can do that. They may, of course, have some associate debts. Okay, so those need to be thought through. Can you sell those cars or houses to repay those car loans or mortgages? So banking is one subject in itself. Then, of course, we come to properties. Yeah, so some people own a property. They might have investment properties. So again, they need to consider, do they want to sell the property, or do they want to have it as a sort of asset that gives them some level of passive income over time? So typically, unless an expat has been overseas a very long time, they would pay capital gains tax on that sale if they did that sale once they moved back to the UK. So all of the gains they've made on that property while being an expat would be ignored by the UK government because you would effectively pay tax on the whole gain. Same from a rental perspective. As soon as you go back to the UK, you will pay tax on the rental income, which after the tax position may or may not be enough to pay the mortgage position. Yeah. So it's about timing. It's about working where you want to leave assets. Same for investments, what the tax consequences are. And again, all of that needs thoughtful and careful consideration and planning.
So whilst living in the UAE, it's very well known for there being no income tax here. However, what are some of the tax implications when expats move back to their home country?
So when you go back to the UK, the tax differences between Dubai, UAE, and the UK is significant. What can add insult to injury, though, is the consequences of not tax planning their life in their previous jurisdiction, i.e. the UAE. So let's break down those into 2 or 3 brackets. So the first one is income tax. So when you live overseas, you pay no income tax. When, of course, you go back to the UK, you start paying income tax and national insurance. However, when you move overseas, you need to have spent at least 12 months overseas to make sure that income isn't added back into the UK calculation. But what some people fail to understand is you must pass through an April to an April. So it might be up to 2 years, but it's 1 year as long as you pass through an April to April. It's one of the reasons why some footballers in Saudi, for example, are making some mistakes at the moment. The second type of tax is capital gains tax. So for example, if I've moved from the UK and I've sold an asset or I've sold a business, while that would be tax-free if I lived overseas, if I went back to the UK within that 5 years, that tax would come back into the calculation. One of the areas that we see a lot of work at the moment is entrepreneurs or business owners moving from the UK and starting to take their retained profits from their UK-based company without any deduction of tax in this country. But of course, if you haven't been here for 5 years and you move back, those calculations will be in favour of the UK revenue. Yeah. We also see with pensions. So there's a great tax planning opportunity now with people with UK pensions, where if they're over 55 and we've moved their UK pension out in full without the deduction of tax, that also has a 5-year window. Yeah. The last one, of course, is inheritance tax. So up until recently, it was quite difficult to remove inheritance tax consequences on a British person. Yeah. Now, of course, they've changed the rules. So if you've now been overseas for 10 of the last 20 years, you no longer pay UK inheritance tax on those assets that are based outside of the UK. So, of course, I'm working with lots of expats here now that have been here 10, 15 years, that have built up a reasonable sum of wealth, that, of course, are now having to make that decision that if I was to go back or when I go back to the UK, I'm now re-entering all of my global wealth back into the realms of a UK inheritance tax calculation. And again, these are important considerations, whether it be income, capital gains, death duties, all need sophisticated tax planning opportunity.
So when it comes to other documents like wills, guardianships, insurance, what are those aspects that clients need to think about when returning home?
So everything needs to be reassessed. Yeah. So many people may have done a will in the UAE. Many people may have assets internationally. Many people might have assets in the UK. So we need to make sure that we've got the right will, the right guardianship document for your new location of living. Yeah. Often we have a healthcare with our employer. So as soon as we leave our current employer, all of our family are now exposed. Yes, you may have the National Health Service when you get back to the UK, but that may or may not fit with the standard of medical care that you've been receiving overseas. And then also you may have life insurance, critical illness, disability, income protection type policies, which may or may not work again when you go back to the UK. One of the areas that I often see not working, for example, is when people take out insurances often through some of the banks. A lot of those policies are annual renewable policies, and you need the renewal of your Emirates ID to renew it. So of course, as long as you can't do that, then of course you no longer have that life, that critical, that disability. And of course, you may be in a different medical position, you may be living in a different country. And again, that may have severe consequences. So anything to do with family protection, legal documentation, wills, insurance, all of that should be assessed before you go back and continue to be assessed when you get back.
So let's dig a little bit deeper. What does proper repatriation planning look like?
So in a perfect world, repatriation, we have some time to study and think and brainstorm about all the things that would affect them when they leave the UAE and all the things that they need to do when they move to the UK, for example. So when they move overseas, again, making sure that they've done the numbers. What are the impacts of income tax, national insurance, capital gains tax in the UK? Can they afford, do they want to afford that lifestyle when they go back to the UK? Yeah. Making sure that investments, real estate, insurances, legal documentation have all been understood, and the timing of the way that we repatriate those policies or that infrastructure back to the UK is also important.
So in an example where a client has to go back to the UK for unforeseen circumstances, how can we still support them with that move?
I think the most important thing is we do support them. We see these cases on many times. So in some respects, we just need to work quicker. Yeah. For other people, it might be that if they need to get back to the UK very quickly, we might do that on a temporary basis, and we classify that as a holiday or trip. And then when they come back, we can then start to repatriate in the right way. But for many people, it's about just making sure that legal documentation, insurance, the investments, and again, we can work quickly with clients. The most important thing is they come to us before they move. On occasion, people say that they've moved, they didn't let us know, or they didn't let an advisor know. And then of course, there are sometimes consequences that are difficult to reverse because they didn't let somebody know before the event. So always keep your advisor, or if you don't have an advisor, make sure you get some level of expertise, work with them, and the outcome should be fine.
So how can Skybound really support clients and make sure that they get this right?
From our side, it's in many respects, that's our signature service. It's our expertise, it's what we do. We've been doing this for decades. And I think from a UK perspective, a UK client, our ability that we are UK FCA regulated, the ability that we're Middle East UAE regulated, means that we look after you both in the UAE and in the UK. So that transition of working out what products you should take with you, what we should commute into the UK, being able to set up all the infrastructure that you need in the UK, whether it's around that will document, whether it's the tax planning, whether it's what to do with your right products, or the tax consequences of migrating products back to the UK. And then of course, what can we do on the other end with some of the tax efficient opportunities that we have? Really just making sure that you feel comforted, that your family are protected, you're minimizing your tax, and you have a sort of new sense of purpose, a new sense of direction in this sort of new UK life that you're going to now lead.
So Mike, what's your one final piece of advice for someone who's watching today?
So for me, often it's about the complexity of the case. And I try not to scare people into action. The most important thing for me is understanding the complexity. So for some people, if I'm 24 years of age, I'm earning a reasonably low salary in the UAE, I've been here a couple of years and I go back to the UK, it's probably not the end of the world. Yeah. If of course I'm in my 30s, in my 40s, my income is more considerable, I've got a family, maybe I've got kids at school, yeah, then I would suggest people take their time. Yeah. So don't try and walk into the UK and think it's going to be okay financially. Don't think it's okay just to sort of return back to the UK and not have understood the tax consequences. Don't just think because you've read a book on managing and buying ETFs that somehow that includes tax planning, because it doesn't. Yeah. So for me, think, do the calculations, take stock of the situation, try and bring in some level of expertise, make sure you've got somebody the other side that's also been working with you in the Middle East that can hold your hand both in the Middle East and in the UK, and for sure the outcome will be better.
Amazing. Thank you so much, and some absolutely incredible advice there. And thank you so much for watching. That is the end of our Suitcase Assessment series. Thank you so much for joining us. If you would like to know any more information or book a consultation with us, please do click on the link below, and we'll see you soon.